Hi, and welcome to Edolab Markets. Today we're mapping institutional footprints, using Edo Order Blocks. An order block is the last candle against the move, right before price breaks away with force. It marks the zone where big orders were absorbed before the impulse, and price often returns to it later to react. On Morgan Stanley Weekly, each shaded box is an order block the indicator found, with a quality score printed on it. Instead of drawing zones by hand, you get them mapped automatically, and scored. A bullish order block is the last down candle before price breaks sharply higher. That down candle is where sellers were absorbed and buyers took control, so it becomes a demand zone. The indicator draws it as a green box from that candle's high to its low, and extends it forward. On Lam Research Weekly you can see green boxes under price, each one a level where demand once stepped in. When price falls back into a green box, that's the zone to watch for buyers returning. A bearish order block is the mirror, the last up candle before price breaks sharply lower. That up candle is where buyers were trapped and sellers took over, so it becomes a supply zone. The indicator draws it as a red box above price and extends it forward as resistance. On Decker's Weekly the red boxes sit overhead, each marking where supply once overwhelmed the move up. A rally back into a red box is where sellers may step in again. What makes a candle an order block is the displacement that follows it. The indicator only marks a zone when price closes beyond the range of the last several bars, a real impulse, not just drift. That strong break is the signature of institutional activity, and the order block is the origin of that move. On Palo Alto Weekly you can see the boxes anchored right where each powerful leg began. No displacement, no order block. The impulse is the proof. Not all order blocks are equal, so everyone gets a score from 0 to 100. The score weighs four things: the size of the candle body, the volume behind it, the strength of the displacement, and whether it aligns with the 50-period trend. A high score means a big, high-volume candle that broke hard in the direction of the trend. On Carvana Weekly the strongest block scores 79, and you can read the number right on the box. You can also set a minimum score, so only the cleanest zones are drawn. Once a block is drawn, the indicator tracks what price does with it. When price returns and taps the zone for the first time, the block is marked tested, and its border thickens. A tested block has been revisited but still holds, it hasn't been broken through. On Vertex Weekly you can see blocks with the thicker border where price came back and reacted. Tested is the first sign a zone is in play. If price closes all the way through the block, the zone is mitigated. The order it represented has been filled and consumed, so it loses its edge, the border turns dashed. A mitigated block is history, the level did its job, and price moved on. On Shopify Weekly the dashed boxes are the spent zones, and the solid ones are still live. Reading active versus mitigated tells you which levels still matter. The panel in the top right keeps the tally. It shows how many bullish and bearish order blocks are currently active, color-coded by side. Then the strongest active block, with its score and its price, so you know the single best zone at a glance. And the minimum score threshold you've set, at the bottom. On Steel Dynamics Weekly the panel tells you the balance of demand and supply in one look. Let's open the settings. Detection is where the logic lives. Displacement lookback sets how many bars the break must clear to count as an impulse. Origin lookback is how far back it searches for the candle that started the move, and minimum score filters out the weak zones. Touch mode decides what counts as a test, a wick tapping the zone, or a full close inside it. On Conoco weekly the defaults are a solid starting point. The rest is presentation. You can set how many order blocks to keep per side, the colors for bullish and bearish zones, and their opacity. Whether to print the score on each box, the label size, and a dark or light theme. And the panel's corner and size. On Union Pacific Weekly the defaults keep the chart clean, tune them to taste. Finally, the alerts. You reach them from the Create Alert dialog. There are 6, a new bullish or bearish block, a bullish or bearish block tested, and a bullish or bearish block mitigated. So you can be told the moment a zone forms, the moment it's tapped, or the moment it's broken. None of them is a buy or a sell order, they simply mark that a condition was met on the closed candle. Edo Order Blocks is free and open source. You'll find the full script on TradingView, and everything else on our website, www.edolab.io. Structure before signals. This is Edolab Markets, and we'll see you in the next video.